Very interesting behavior coming out of the price action for FNGR today. Let's go ahead and go over the potentials because I think I discovered some very interesting things. So make sure to stick around for the whole video as this is going to enlighten you quite a bit. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with an FNGR technicals, raw price action, and statistical threat of analysis on this happy Friday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, guys, so we're going to start off with the meat and bones here, right? At the very essence of the price action itself. So what I'm going to show you here are very typical areas of supply and demand. Okay, so the price action from faced actually yesterday, where we faced that capitulation where it came back down to the 491 area and immediately shot up to the sky there. That actually showed us a very interesting touch. Okay, so this circle here, that was the support line that we faced, right? Of which was a very similar support line here, here, and even right in here in this section here. Okay, so what I'm trying to say here is that breaking upside of this resistance level here is very critical for the asset as it has done it before, right? And it's absolutely it was a critical resistance. You can see how much the price action has reacted from even touching it as a resistance here. Immediate pullback, right? You can see here that we even used it here with a tweezer top on that candle iteration there and essentially capitulated there. So this is a very notable support zone if it is changed into support, right? So this is kind of why I wanted to point this out to you, right? So this is the chop zone where we were in, right, from phase before, and then we got inside of it again. We're breaking upside of it and now validating the newly converted resistance into now a support before we can decide what to do here. What I can say is that on the 12-hour chart, it looks like we're building a bullish formation, and this is a pennant. Okay, so the pennants are usually continuation formations when built during an upside, right? So we have an upside being built here. Then we're actually starting this reaccumulation phase, and there could be the potential of a breakout to the upside here, okay? But remember one thing, this formation can be played both to the downside and to the upside, okay? It's just the thing is that the bias is towards the bulls because it's being built during an upside. So that, you know, naturally with the let's just say you know, by the traditional trading rules, it's favoring the bulls here. Okay, so one more target that we can take into consideration here is actually the center of the triangle itself for a price objective. So yeah, this is the way you essentially gain a price objective from this formation in a very discretionary manner, right? Take the trend line from the top side of the very bottom side, center, and the breakout point. So if we are suggesting, or we're implying, actually better said, that we are to break out from this 75 to 80% of the apex, or even, I mean, I guess it can happen even before that, right? Let's just say that it would happen here either Monday or Tuesday, right? So I guess we can just keep it here for now. The target that we would face first would actually be consistent to the top side of the range, right up here. So about 716, it's actually suggesting about 710 there, right? But it's very confluent with the 716 top. Okay, so now the middle target is actually taking us to about 777. Okay, lucky 7 there. So it is confluent with the resistances faced right over here too. Okay, and now the top side of this formation is indicating that we could make a jump to around $9.22, which naturally would make an overall resistance zone for us, right? So 922 to the all-time high of 996 or 992, right? So I can try to adjust it as best as I could, but you know, I need to zoom in. 991 will just have to do it for now, but 992 is the top. Okay, so that is essentially what it is suggesting for us. We can also back it, right? We can also back it with some geometrics. So let's take into account some Fibonacci ratios here, right? So why don't we actually take it from the current 12-hour print high, the range high, to the swing low. Okay, so let's go ahead and do that now, just like this here, and let's see where things line up. Okay, so for the target that we're talking about here in the center, That is very notable because 777 to 796 at the 1.618 would be a pretty ideal target, right? So for a breakout. So I know that I'm implying everything to the upside here, but I would just like to kind of present these resistances too, right? Just so we can have an idea over what could be happening. Right. So in this target here, we're going to have to go ahead and take into consideration the opening and closing values of these two candles here. Right. So let's go ahead and do that. It'll be something along the lines of this here to the one spot 272 at about 718. Right. So this is essentially where this trend line is suggesting for us to go. Okay, now the last one we got, the center one we got, the very bottom one we got. Okay, this is the path. But now what's to happen from the price action literally from here on, right? Because as you can see here, if we're talking about this range here between this box and this box, then we're technically at the 50% of returns, right? We're right in the middle. So there is a little bit of indecision happening here, which is honestly understandable because it is breaking upside of a very critical resistance, like we said, right? So I can see why there's indecision in the market, right? So let's go ahead and continue on and see if we can solidify this once and for all, right? So first of all, let's go ahead and let's take a consideration here from our algos. What are the algos here going to tell us? Right, so just in case you guys are interested in getting a pre-order for these, we have not released these algorithms just yet, but I'm going to be introducing a few of them as I move forward. Okay, so these are a re-release, and these are actually the code. You know, me and the coder Ike, we actually have tightened these up. We have made them. We have upgraded the code so that they consider price action a slight bit differently than they did before. Okay, so please reach out to us here if you are interested. So what we're looking at here is what I usually look at in general: volatility versus momentum. So volatility represented here by the BBWP. We're looking at volatility here. Volatility here is going to be represented by the blue bands. So that would be the Bollinger Bands, right? So now momentum represented by the MACD within this. Okay, so BBWP does not have a MACD within it, and this does take into consideration the MACD. So in essence, this is my strategy here built into one very simple indicator. Okay, so you guys hear me all the time. Let's go ahead and refer to the volatility versus momentum profile or the footprint model. This is essentially it consolidated into one indicator, right? With a built-in strategy with bull and bear signals, right? So bear signal, you get the downside, right? Bull signal, you get the upside. So you can see the basics of it, right? So please remember that we're breaking outside of broadening descending wedge. So this is kind of a big deal, right? Since it is on the weekly chart, every single candle is a week long to complete. Okay, so you can just see how long this has been in the works here, literally from January, February of 2021, which is right when the bear cycle started. Okay, so, and curiously enough, you know, we got a bear signal right in this candle here, and it never gave way until you got some really random upsides here and then here and there, right? So anyway, team, yeah, so this is very particular here because we are absolutely contracted, and now you can see there's a huge expansion happening here. So, and the expansion is telling us to look forward because we are presently expanding at critical expansion. So this is critical contraction here. So mathematically speaking, whenever we are fully contracted, we are set to make a huge expansion, right? So, and this is telling you the very same thing. So we have actually contracted into very close to the critical zone of 15 percentile. And this has expanded and is currently sitting the moving average is below it, but the volatility component itself is suggesting that we would be inside of the critical volatility zones soon. And this is also suggesting the very same thing, and it has printed a bull signal right here. And notice how it doesn't have a bear signal just yet. It's still suggesting upside on the macro scale. Okay, so let's go ahead and just get rid of this real fast, and let's get rid of the enhanced MACD real fast. And pull up the other momentum indicator, which is this is actually the favorite amongst everyone, right? So just to show you this real quick, we're not going to elaborate on this one here, but you can see very clearly that this is a momentum-based indicator based on several exponential moving averages. And this does have also long and short strategy. So long signal printed here, you get that upside, short here, you get that downside, long here, you get the upside, right? Very simple. So this has also been pretty much I guess we can just call it remastered, right? For the algo. So the algo set is available to you guys. Just make sure to reach out to us whenever you see fit. Okay, so I have something very interesting to show you here, though. Okay, so this is FNGR on the weekly time frame, and take a look at AMC on a weekly time frame. Well, I mean, that's isn't that just curious, right? So very interesting that we're getting the same ascending channel with two broadening descending wedges, right? The only difference between AMC and FNGR right now is that FNGR is actually realizing the first part of actually the realizing the top side of this wedge, which would actually be around $13. So we are getting that pump to the upside, and it looks like we're getting the retracement to retest here the newly converted resistance into a support before continuing on to the upside. Okay, so here in AMC, it looks like we have reached a critical demand zone, and there could be some type of movement here for an upside, and that's breaking out of a smaller time frame, broadening descending wedge with these purple lines. So we're testing that. Actually, now we just got that. Oh my goodness, just about a month ago, we got that test of the support, and now we're bouncing up. Interesting. Okay, I didn't notice that until now. Very good. But yeah, very interesting behavior here, as they are super similar, right? So actually a little scary, right? But anyway, let's go ahead and continue on the analysis here and see what we have, right? Because I have to show you one more thing, and this is indicative of a downside coming in, which is the opportunity that we're looking for as far as gathering some more longs, or if you're considering maybe, doubling up, I don't know. Whatever the case may be, this actually may give us that opportunity, but I'm not sure for a couple reasons, and I will tell you why real fast. Okay, just first, let's get through this. Okay, this is the divergence chart that we're looking at. Okay, so divergence represented. Actually, let me just tell you what it means, right? Divergence is the opposition of price action, this right here, versus momentum, the RSI. So in this case, momentum represented by the RSI. Relative strength index. Okay, whenever you do get a series of higher highs, right? So this point being a high, and you get a higher high, and that if you combine that with price action. So for example, here's the pivot, and you get that pivot right up here, and you notice that this is a higher low coming downwards. That represents a drive of hidden bearish divergence. And here's this for you, right? So in case you want to take a screenshot of that for your reference, go ahead and do so now. So that actually happens, and that presents a downside, and it's already validated. It's already getting a downside right now. But I'm gonna show you what happens on the buy daily chart once we jump into it, okay? Which may mark the end of it. I'm not sure. Okay, but this is, remember I said at the beginning of this video that there is indecision in the market, right? So this is another reason why I'm thinking that we could be facing a support soon. Okay, so, and now if you take a look very closely right over here, this is another drive of bearish divergence. In this case, this is regular bearish divergence. So that happens when price action is making a higher high and the momentum is making a lower high. Okay, so you can see that right over here, a regular drive of bearish divergence. Okay, and yeah, so I just wanted to show you that because there is according to the daily, there is several drives here that have kind of confirmed the bearish, a bearish outlook. But to be very honest, we may have already realized that, and we may come back to test some of these supports. So let's go ahead and take a look at that now, which would be the last part of the analysis. Okay, so let's load up the 30-minute immediate short-term time frame here and look at all of the RSI drives, right? So this is the 30-minute immediate short-term suggesting an upside, right? So very limited because we do have that SMA 14 as resistance. Same situation here on the buy hourly. We have that resistance coming up from the SMA 14. Now, this is not just resistance from the SMA 14. If you remember correctly, you have the gravitational zone right in here, right? 2% up of the mean, any area, right? 2% up, 2% down. You have that gravitational zone here plus the moving average. Highly likely for this to find an upside and resist from that gravitational zone back down. Okay, so let's go ahead and move on here. The 4-hour time frame has this little pivot. If you've been watching my channel for some time, you know that I do not believe in those little pivots as they tend to fail, right? Just like those there. So, and just like these here, right, in the opposite direction. So it fakes you out and is nope, continues onwards and upwards. Right, another one right here, another one right here. Just yeah. So in this manner here, we're inverse, right? So we're actually going to the downside, and I can't actually trust that, right? And the reason why we can't trust it is, first of all, because we're about to face resistance on the 30-minute and the bi-hourly, which these timeframes would cascade into the 4-hour, forcing it to the downside, and then it would cascade into the 12-hour daily and then to the bi-daily. So please take a look at the bi-daily. This is what I mean by it may be a temporary downside. We have the SMA 14 located right over here, but remember that this the larger the time frame, the bigger the lag. So that means that the SMA 14 may very well clear the gravitational zone here. So it'll go up ever so slightly, a little bit more, and start curving. And then this would actually continue to the downside and meet the SMA 14 right about the 50% area of the bull strength percentile. And that zone right there, we would potentially find a bounce and continuation to the upside. This is why I'm saying that we could be presented with an opportunity here to get long the asset, right? So from that moment, you're actually then, I mean, if you want to get even deeper here, then yes, the 3-day time frame would also continue to the downside, but it would continue to the gravitational zone, which would be the 68% right in here, which is just like I said, any other. So we would essentially continue to the downside, and then bam, face the bounce from the gravitational zone, suggest a continuation to the upside from here. Okay, so that's essentially what I'm looking at here. This is how I'm perceiving the momentum for ticker symbol FNGR. Now, if we are to kind of put, if we are to put a number behind that, I guess we can do so, right? So there are several areas for us to look at, and I'm not sure that these areas are going to be, this discount coming up may not actually last for too long whatsoever. And I'm saying this because if you're looking at the candles here, you can see very clearly that we have to reject from these points here and then come back and validate the newly converted resistance, right? So you can see here, resistance touch, failure. We come back down, validate a support, and then continue. We break upside of it. Then we come back and test it again. Then we can do the breakout to the upside again. Check this out. So we break it, we come back and test it. So we're in that process again. We're doing that. As we move up, we're touching the next zone that we want to be at, and then we're validating the previous zone of support so that we know that we have a support there with validations and confirmations. By the way, these are 12-hour confirmations, right? So yes, I would consider those highly likely to continue to the upside if we do get closures above the support zones, right? So in this case, you can see here that we got a very clean 12-hour candle break upside of this support. This suggests a continuation to the upside. Okay, so this one right over here, we broke, and we are now closing a few of them that are above this support. So that means that we can reaccumulate here before a continuation to the upside. So let's see if we have any moving averages above us. Okay, so let's see. In fact, it's very hard to see. I'm sorry about that, right? Actually, let me just go ahead and get this out of the way and just reload my algorithm because I did update it. Here we go. Okay, the SMA 10, it's above us. Remember when I was telling you on the RSI, short-term upside rejection? That is what I'm speaking of here. And I didn't see it before until just now. This is the price action here, sitting at about 579. We would potentially get that upside to face resistance at about 601, right? From 601, we would then retrace. And this is where it starts to become a little difficult to understand where we're going to retrace to, because the validation of this pennant, which is a bullish formation, would essentially need a second touch. And that would be located at around, I would say, if we're going to do it on this candle here, it would be around 519, right? But near 519, is this support zone here. This candle high, this wick low, right? All that stuff right there. So yeah, this candle high, the wick low, and the wick low right over here. That has a lot of confluence here. So that would suggest 528, right? So this is why I'm saying that there is a little bit of confusion in the market here. So we may very well, this is the present candle, okay? So we may very well get that upside, validate the 601 or 602 area. Then we would actually come back down here. But what if this happens? What if we move on one more day? And that's going to be on Tuesday or Monday, sorry. Right? So this is Monday. I'm talking about Monday at the end of day, right? So literally at the very end of day. What if we get that touch to the upside here, which could be now 604, right? Or 603, even, I mean, I'm not saying 619 at this point because that's too high. 603, 604, maybe where the SMA 10 would be located. Okay, we get that upside, then we come back down and look at that target here. That meets at the 50% of this area here. So that may be our bounce zone. So I'm talking about maybe Tuesday or Wednesday we can get a bounce and a breakout out of this. I don't know. But if we do get that at the end of day on Monday into Tuesday and we close with this volatility loading from here, oh, that could lead to some pretty explosive upside moves. Who knows, right? So I'm just kind of putting out there whatever I'm seeing on the chart. I'm sorry that the video is so long. I just really feel that it's a critical moment for us to evaluate what could be happening here and really understand the opportunity that's about to be presented. Please remember first and foremost that I am not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well, a very, very good weekend, and I will catch you at the bell on Monday. Adios.